Hello and welcome to a trade breakdown. This is a breakdown of my most recent day trade or swing trade. I am an options trader. I use something called the breakout strategy. I traded ticker SMR, which is NewScale Power Corporation, and we took this trade on the breakout of the white trend line. Now, we entered this trade 2 days ago, and so I'm going to break down my entry, my stops, and the whole execution throughout this time. So essentially, we were looking at this nice consolidation on the daily chart, and we were waiting for a breakout over that trend line to enter the trade because this is a breakout strategy. Now we're going to go down to the 5-minute chart and show you how we entered this trade. So we entered this trade on Monday. As you can see here, the market opened, moved above the trend line, and closed on a 5-minute candle above that trend line. That's where we enter the trade. Once we enter, we're setting our stop loss typically at low of the day, and then we're going to let it do its thing. Essentially, on that day, we had a bit of consolidation lower, and it ended the day quite a bit higher. So we were comfortable holding the trade because it had not closed significantly higher, had not hit any of our take profits. Now, overnight, we got some Trump tweets. Because of that, I had to slightly adjust my stop loss. Now, this is not something I would recommend. However, luckily, the size that I take in my trades is always very comfortable in terms of my risk management and how much I can afford to lose. I always risk a very small percentage of my account, and so I was comfortable moving my stop slightly lower to close this gap because this was news driven. If it was just price action, I would have been stopped out and I would have just taken the L. In this case, it was news driven. And so I felt like giving the trade a little bit more leeway was okay, once again, as long as it respects your risk management. Now, I moved the stop a little bit lower to close this gap because we moved on news. And as you can see, it retraced, picked up, and moved back above the trend line throughout that same day, which is a very, very good sign. It means buyers came in. We closed that day significantly higher, back above the high of the previous day. So you see that is once again very bullish. And then today, luckily, we opened and it just rocketed. And so we gradually took profits. We took profits at about 50 to 60%. And then when it really ripped higher, we took the rest of our profits for about 140% profits. Now, it would have been okay to leave a runner. However, because the contracts were quite expensive, I was not able to trade significant size. I only had about 4 or 5 contracts. And so because of that, I didn't want to leave a quarter of my trade on by leaving one contract. If I could have left a small percentage, like 10% of my trade, I think I would have left, 1 or 2 runners. But in this case, that was not possible due to the price of the contracts. A quick side note on which contracts I chose for my options. So I always choose the contracts or the strike price that is right at the money or near the money. I got in around 44.80 in terms of my entry. So I took the $45 strike price and I took the contracts expiring October 31st. I entered this trade on October 13th. So this means it gave me about 3 weeks out in terms of the expiry date. I always go 2 to 3 weeks out depending on the time frame, if I expect I'll be holding the trade for a while or not. And I always take near or at the money in terms of the strike price. So yeah, this broke over, surpassed the previous highs on the daily, which is another reason why I exited completely. I would not be surprised to see this retrace and see some profit targets because we broke that local high on the daily chart. And so typically if we see large profit taking, then we'll see again some more consolidation here. And so I trade weekly contracts on options, which means that I cannot afford to hold this for more than about 1 week at the most. If you're trading further out contracts, then you may want to hold a little bit and see if it pushes a little bit higher. I would not be surprised to see follow through on this move. On the flip side, if you're trading shorter dated contracts like dailies or weeklies, then you definitely want to exit on these big pushes up, because I would not be surprised once again to see some big profit taking in the next day or so. And so that's it. That's the simple breakdown: the entry, the exit, the stop loss, how to manage the trade. Hope this was educational. Hope this helps. You can keep checking out my content. I'll put more breakdowns of winning trades, but also losing trades, so that people can see what it looks like, where to exit, and how to manage the trades properly. Hope you enjoyed. Thank you. Have a good day.